Today we're going to discuss the upcoming Jackson Hole bun fight and New Zealand Reserve Bank's decision to cut rates. And I'm going to argue that the whiff of stagflation is getting stronger to the detriment of ordinary households and businesses around the place. The Reserve Bank of New Zealand cut the official cash rate by 25 basis points, citing tighter spending by businesses and households, falling home prices, and uncertainty in the outlook for global economic policy, despite the real risk of inflation running above 3%, which is way above their target. However, not all risks are tilted to the downside, with inflation not being as well behaved as the bank would like to see. So if inflation fails to moderate to the extent that they envision, this could limit the extent of monetary stimulus the Reserve Bank of New Zealand will be able to provide, which is the theme that we're seeing more broadly across central banks. For example, the Bank of England cut the cash rate last week, despite inflation coming in hot this week, with food up close to 5% and overall inflation expected to touch 4%, while growth remains weak and the cost of government debt rises. Inflation in the US also looks to be turning higher as the core consumer price index, which excludes food and fuel, rose in July by the most since the start of the year. Yet the costs of tariff-exposed goods didn't rise as much as feared yet. But there are recent weaker signs from the jobs market, and recent producer price data confirms the inflation uptick, so the tariffs are expected to begin to hit consumers later. But with inflation still above the Fed's 2% goal and signs of a slowdown in the labour market, policymakers have become divided on when to resume rate cuts. And in Australia, the inflationary pulse is stronger than hoped, despite recent rate cuts amid massive government spending. So all of this has the whiff of stagflation, where prices rise, wages fall, and interest rates are caught in the gap. And it also poses the question as to the real effectiveness of monetary policy, especially when governments continue to boost money supply, an act which is directly inflationary. Now, this is something which should be on the agenda at Jackson Hole this week for the Kansas City Fed's annual economic policy symposium, which kicks off later on Thursday, with central bankers from around the world gathering in Wyoming to discuss monetary policy. The highlight is likely to be Jerome Powell's speech on Friday. That's his last one at the annual gathering as Fed chairman, with investors searching for hints for a September cut